Well, that's as far as RBL Bank is concerned. But Abhishek, you've also been going over Yes Bank's numbers. Those weren't as good. I mean, they were below what the poll had thrown up.
Operational weakness is seen in the numbers of Yes Bank, and the numbers are way below our poll. So the gross NPA remains flat, 2% quarter on quarter. It's the same 2% in the previous quarter as well. Net NPA has improved a bit to 0.9% versus 1% in the previous quarter. The NII is actually declined by 3.3% YOY and about 3.7% quarter on quarter, which has meant that the net interest margin is at 8-quarter low of 2.3%, which compares to about 2.5% in the previous quarter and about 2.6% in the same quarter last year. Cost to income ratio is at 5-quarter high and one of the highest in the industry, or one of the worst in the industry, at 74.4%. Annualized credit cost is at 9-quarter high of 1.47% when compared to 0.63% in the previous quarter. The PAT has come in at 225 crore, which is a decline of 34.25% sequentially. 19 quarters that you are seeing the return ratios remain really weak, with ROA of less than 0.5% and ROE less than 5%. In terms of PNL versus our poll, both are below our poll. NII is at 1925 crore. We are working with a number of 1,965 crores. PAT has come in at 225 crore. We are working with a number close to 350 crore. So operational weakness is seen in the numbers of Yes Bank. Back to you.
Well, that's as far as RBL Bank and Yes Bank numbers are concerned. Thanks very much, Abhishek, for taking us through the fine print of that. Stay with us. We also have guests joining in to look at these numbers further. Darpan Shah from Haitong Securities India is with us, as is Ashutosh Mishra from Ashika Stockbroking. Ashutosh, quickly your thoughts. Let's start with Yes Bank, for instance. The numbers operationally weak, but it's one of the few banks apart from Kotak Mahindra Bank that's actually highlighted some initial risk that is starting to build up in the unsecured portfolio. What do you make of that in the numbers?
So yes, there is already regulators as well as multiple industry watchers are clearly indicating that at the retail level there is some risk is getting emerged out there. We need to little bit vigilant about this part of it, and probably few other banks who have a relatively higher unsecured portfolio, especially unsecured personal loan portfolio. There we need to see how the credit cost trend is going to change, and especially credit cost is the lowest at this point of time in the recent history. So any change in that can have a material impact on the earning from the future perspective.
And Ashutosh, what did you make of the RBL Bank numbers? We also heard from the management there, not much when it comes to the unsecured retail portfolio, but they're confident that, at least on margin front, unlike other banks, they may not be affected as much.
Yes, they have seen from last at least 4 quarters, they are continuously showing improvement in the performance. Especially new management has done a lot of good job out there, and on bringing also down some of their low yielding portfolio, low yielding corporate portfolio, and increasing the proportion of high yielding retail portfolio, which they are continuously working on. But here also we need to keep in mind is that RBL Bank is also having a relatively higher exposure to some of the unsecured loan portfolio. So the important is to watch how that portfolio perform for the banks going forward from here.
Okay, Darpan Shah is also with us. Darpan, earlier we were talking about the ICICI Bank numbers and the Kotak Mahindra Bank numbers. A quick word on, the new CEO appointment for Kotak, what you made of that, and the numbers as well.
Okay, so firstly on number front, pretty much in line with our estimates, at least, where PAT has been grown on a sequential basis and NII is largely flat on a sequential basis. This is predominantly to do with a sharp NIM compression of almost 35 basis points, which they have seen during the quarter. In terms of the new CEO, which has been appointed, it looks like a very credible CEO which has been appointed, having a global experience, vast experience in the banking sector across geographies. So I think that should be looked as a positive for.
Well, Darpan, if I take a look at Kotak Mahindra's deposit growth, per se, Q1 FY21 to Q3 FY23, the deposit growth has been anywhere between 6% to 13% kind of a range. So they have not actually showed up deposits that you saw with the likes of HDFC Bank. So the margin compression is actually on the higher side, right? If I'm able to understand that correctly, that over the last 2-3 quarters is when they started showing up deposits, and their CD ratio is now at comforting levels. Do you see any, a material change in your, forecast for FY24, or let's say over the next 12 months with respect to net interest margin? And how do you see the valuation of Kotak Bank?
Okay, so a couple of questions here. So first on the margin front, definitely the compression is higher compared to the similar kind of a large peers which are there, and understandably so, because Kotak has a significant proportion of the floating rate book. So they had seen a steep rise, and that's how they are seeing a steep fall as well. In terms of valuations, it has become very much attractive, we believe. If you see, there has been a significant de-rating for the stock over the last couple of years. And it's current, as per our estimates, on a standalone book, X of subsidiaries, it's trading roughly around at 2x FY25, which we believe, for the kind of asset franchise which they have, for the kind of liability franchise which they have, and inherent quality perspective which they have, looks attractive at current levels of 2x.
Darpin, you spoke about the subsidiaries. If I take a look, the quarterly PAT of subsidiaries is perhaps at an all-time high. So the subsidiaries have also started to fire. And with this management change, which was an overhang done, how do you see the trajectory for Kotak Bank in terms of investors?
So you absolutely correct. Subsidiaries profit has been improving. Not only the capital market related subsidiaries, but other subsidiaries are also slightly contributing. Prime has seen a growth in assets. So these are all positives. And as you rightly said, the CEO change overhang is now behind. We have got a name of a very credible CEO with a global experience. So this should be looked as a positive for Kotak.
Okay, Darpin and Ashutosh, thank you very much for joining in here on CNBC TV 18 with your thoughts. And thank you, Abhishek, for taking us through the numbers. On that note, we're going to take a short break, but don't go anywhere. We're back in just a moment.